Okay, guys, today we have to start our lecture number one, and this is your financial accounting foundation. Clear? Uh, we will study in the chapter, this is the chapter number one, and here we'll study the business risk, business structure and risk, bookkeeping, accounting, trade cycle, and sale, and financial statement, and capital income, and user and reporting boards, right? And here we have a business structure. This is the chapter number one. And about business structure, let me give a flavor that what we mean by the business structure and what is the risk and where what is the connection or the link between the structure and risk. you know uh, Business structure, when the business structure, let me write here, if your business structure is complex, then definitely here I will write risk. So when your business structure is complex, then your risk will be low. So you will have a low risk. It means what we mean by that. Let me erase this thing. Stroke eraser. Okay, what we mean by the complex structure? By complex structure, we means there are some lawful structure. This is the lawful structure, means there is a proper documentation, extensive level of documentation. There is a proper meetings. There is registration. There's a lot of work, the clear policies and so on like that. So when the mechanism of the company, the business is complex, then definitely it will protect you from the risk. So your risk will be low. By low risk, we means that your personal responsibility is limited. So means you will only suffer by your action, and you will not be accountable for other people's action. So your personal responsibility will be limited, and you will not be accountable for other people's responsibility. Here with the low risk, we means that the decision, when you have proper mechanism, a proper and expansive level of what we can call structure, then your decision is actually based on there's some proper planning, and your decision is based on a clear vision. So when there is a proper mechanism for each decision, then definitely your risk will be low, because there is a proper way that how and when you have to take the decision. And the third thing is it's separate individual and business. So it's mean it give the wall between the individual personal asset and business. So when there's a complex structure, it means that it provide a legal identity to the business, and the business will be responsible for their act, and the person will not be accountable for these things, but person will be responsible only for the action they are taking, what they are the person working in the domain. So it's only liable, and you say is accountable for the domain in which he or she are working, right? So this is about the structure, the business structure and risk. And now we will move on to discuss in detail that what is business. Here we have financial accounting. This is just nothing, but you have just related. Now we have discussed the business, that what is business. Let me give you here just a minute. Okay, now see here, we are here. This is the commercial, here this one, commercial perspective. Commercial, wait a minute. Commercial perspective. From commercial perspective, business, we'll discuss the business. So business is actually an organized activity. What this is, an organized activity. Fine. And this organized activity involve your clear plan, structure, and the division of responsibility. Okay, so the business is organized activity, and this organized activity involves the clear plan, the structure, and the division of responsibility. The second point here is the goods and services. So in business, items and services offered, I'll say here, right here, offered to the market, and the purpose is, to gain financial value, okay, and generate profit. So business is actually, from the commercial perspective, is an organized activity where goods and services are offered to the market to gain financial value and generate profit. Now here the profit is actually the purpose, or you may say goal of the business. Clear? Let's check it here. So business we have discussed in a very clear way that what is business. Now let's move on. We have some types of business. We will start by exploring different business structure. We have different type of structure. The first one is sole proprietor. Let me write it here, then that will be more easy for you guys to understand. Okay. New slide here. So here I will write here business type. Business types. We have four business types. Number one is sole proprietorship. The second one, you have partnership. The third one, you have limited liability company. We call that as LLC. And the fourth one, you have corporation. Clear? So by sole proprietorship, we means that a person or the business is owned and run by a single individual or person. So this is very simple. The second, here we have the whole liability. Whatever you have done, you will be responsible for that. So I mean, this is unlimited liability type of business. So we can say right here, unlimited liability. So you'll be responsible for whatever you done. Now the partnership we have here is actually basically its arrangement, and this arrangements are where two, or you say more, more parties agree to operate a business. So here you have more than two guys, and they are just agree to perform or operate a business. Okay, and the third one, these two things is very interesting, and I will explain this in a more detail. So let me move on to another slide. Here we have create another slide to discuss this concept in very detail. The first one we have here, let me write here, is corporation. And here I will write LLC. Corporation is basically is a separate legal entity with shareholder, and this is also a separate legal entity, but this time with the members, not shareholder, right? And we will understand the distinction between the member and the shareholders. You have just to wait. Now both of these, let me change the color, both of these, corporation and LLC, offer limited liability. Okay, and this LLC is is a popular structure. This is a popular structure that provide limited liability, and corporation is also offering the limited liability facility. So what is the difference between the LLC and corporation? Here, if I write here, corporation is basically a complex structure. This is a complex structure, and this may, you will say, like typically a simpler structure. And I will explain that what we mean by the complex structure and what we mean by the simpler structure. Let me explain it. A larger and more expansive venture or involved here in this corporation, but in this case, this not this is used by the a small or small, and you may say a medium sized business. A little like say a restaurant. Like I will give example of restaurant LLC. But here is the thing is different because the ownership is basically divided into shares, and this is a proper shareholding. Like for example, if you see Apple company, and there is a another company is a Pepsi. So this is a corporation. But if you look into the restaurant or some a small medium sized businesses where the ownership is typically held by the members, and have direct management control. So the difference between the shareholder and that of the member is that members is actually have a direct management control. On the other hand, if you look at the shareholder, then shareholder is the part of the company to share, but the involvement in day-to-day management is often limited, and these board of directors that are directing or kind of running the business on behalf of the shareholder. So liability is limited to the extent of their shareholding, but in case of a member, the member is also liability limited, which means that their personal assets are generally protected by that limited LLC structure. So we have understand that what is the difference between the corporation and LLC. We have studied that both offer the limited liability, but the corporation structure is a bit complex. There's a lot of large and more expensive venture are using this because their shareholding is divided, and the people who are taking share, we call that as a shareholder. On the other hand, we have LLC, which is a simpler structure. There's a pure regulatory requirements. There's no need for the very, a vast majority of regulatory requirements. There's a fewer regulatory requirement is there an LLC, and you have to understand these two concepts. And now let's move on. That what we have here in the I think here we will. Okay, and this is the thing we will discuss. We are talking about this structured business type, and we have trade partnership and incorporated company, which we also call corporation. This is the alternative use word for the incorporated company. And we have also discussed the LLC, which you may say a kit type corporation. Now these things we will discuss later. Now let's move on to the slide. We have here business types. We have discussed this risk versus complexity. We've already done that. Now let's move to see here what is sole trader. So sole trader, you have a limited liability. You have to remember this. The first thing you need to remember for your MCQs. And by this we meaning that your personal asset or at risk. So means your personal stuff will be dragged for the when the companies depart. When your business depart, then definitely your asset will also take the risk. The other thing you have here, see that about the control. So in sole trader definitely have all the risk and they have the control. Okay, so have full control, and but you are the business, and this structure is simple. It's a simple structure. There's no need for any requirements. Very simple thing, and carries significant personal risk. So we have understand here. The first thing we have understand here, and sole trader, that their liability is unlimited. Here the owner have full control and their personal asset or interest, and this structure is very simple. There's no need for proper documentation that we are required in incorporation and partnership or LLC. Now let's move on to partnership. Partnership is all partnership unlimited liability. The case is very simple, same like that of the sole trader, sole proprietorship, and the decision making, and the partner have the involvement in decision making. And wait, let me. We have done this. Now let me slide. Let me change the slide. Okay, in partnership we have discussed there's unlimited liabilities is fine, unlimited liability in decision making. Well, why this spread the risk is also mean each partner is liable for the other action and its balance or share control or its risk. So we have discussed these things. Now in corporation we call that is also corporation, which is a complex structure, the more complex, low risk. So upper, a limited liability, protecting personal asset and a separate legal entity managed by directors. And this structure is complex but provide most protection. So the structure is complex. When the structure is complex, then your risk will be low. So we have done with these things, and we'll discuss the remaining in the next lecture. Thank you for watching.